Hey guys, welcome back to the channel. Today I will be providing a longer term market update on Ergo, where I stand with this most recent breakout, some key levels to keep an eye on in the next few weeks and months, and overall my longer term outlook and thoughts going forward. So if you guys enjoy the content, make sure to leave a like and subscribe. So we have had a pretty huge breakout here on the USD pair above the range we had been in for several months. And I really just want to stress the importance of this longer term range that we just exited. So I'm going to go ahead and play a quick clip from one of my previous Ergo videos back on July 8th. And the focus of this clip is really just to understand what my reasoning was behind believing this $1.70 level would be a huge level to watch for, and how that could potentially be an area to establish a range low. I do not expect Ergo to lose this level unless Bitcoin itself is starting to capitulate below $15,000. Obviously, it is within the cards, but I don't think that's something that we should be focusing on. Instead, I'm really looking at this level to be some sort of area to experience a bounce off of. I do want to talk about this level because I think it's pretty important, and it really speaks out to me on this weekly chart, mainly because this was the pivot point, the inflection point in March of 2021 before ultimately trending on. So that was basically the reasoning and the rationale behind this being as the range low. It's the same thing for the range high at $4. This was the level that we had a peak at. You can see that's where we turned around. That was the inflection point. We basically formed this pretty big correction, and you can see that, what Ergo did was it retraced almost 60% in just 2-3 weeks. And then you had more confluence with this level when we came back later on in July of 2021. Notice how this was the level that we had this low, we bounced off of, and then we went back up to form this double top. Okay, so the point I'm trying to make here is that this is an extremely important range that we've just exited out of, and we've had a weekly close above this level. And this is the first time something like this has happened since we had this failed breakout back here earlier on in April. Now again, the move back here in April was a failed breakout. Notice how when we came back to retest this level right around $4, that range high, we didn't hold it as support. There was no reaction, buyers didn't step in, and we fell right back down through that level and then formed lower lows. So that's what made this a failed breakout, a failed pattern. And that's something that this time around we don't want to see happen. So if we do get a retest in the next few weeks towards this range high of around $4, look to see if buyers and demand start to step in, look to see if there's a reaction off this level and we actually flip it into support. And if something like that were to happen, that would be a great case for the bulls. And if this level is to be flipped into support, that would really increase the probability that we would have a continuation of the uptrend we formed back here since July. So look for that in the next few weeks. Another thing to look out for is going to be this green line on the chart. This is going to be the EMA 34. So if we go all the way back here to July of 2021, notice how this was a huge level of support. This is where that low came down to, and we bounced off this level. And then right here in November of 2021, we had another retest. You can see we tried to hold it. There was an initial bounce for a few weeks, but ultimately we fell back below it, and you can see we made fresh lows. And then what happened was we came back up, flipped it into resistance on this rejection back here in March, and then we continued that downtrend, really going back down to this low. So this is the first time we've actually had a weekly close above the EMA 34 ever since we lost it back here in November of 2021. And that for me is pretty significant. So if we are starting to come back down, we can look to the previous range high at $4 as support, but also the EMA 34. Do consider that today it's at around $3.58, but it's upward sloping. So it's going to continue to move up here, and we could look to both of these levels as our support if we are correcting back down from here. Now the bull case is, again, if we can flip those into support, bounce off from here, and then continue the uptrend we started here in July. The bear case is if we have some sort of failed breakout. So if something like that were to happen, similar to March back here, that would basically mean that we come back into the range, we don't bounce off these levels, and we might have a few more months of consolidation within this general zone here, again from $1.70 to around $4, which again, I get it's a pretty huge range, but given Ergo's volatility, it's just sort of what we have to work with. So that's what I'm looking out for in terms of the USD pair. Now I want to switch over here to the Ergo Bitcoin pair, which I think is pretty important to keep an eye on. So like the USD pair, the Bitcoin pair has actually had a pretty huge breakout above a very long consolidation range. You can see this previous range we were in from December all the way up until we broke it back here in August. Basically what we did was we oscillated from the highs around 11,000, 12,000 Satoshis to the lows of around 7,000 Satoshis. We consolidated, we formed that longer term base, and again, we have had that breakout. So now what we want to see is if we have a continued pullback, look to see if we can form some sort of higher low that is comfortably above the previous range high of around 12,000 Satoshis. At this point along, when we're up from 12,000 all the way up to a peak around 29,000, we really don't want to see another retest of this level because that would be a pretty ugly decline. So look to see if we can actually form a higher low somewhere above that level, again around 12,000 Satoshis, and then from there if we can start to reverse and then continue the uptrend. And something like this would be the case if we're really trending back up to these all-time highs against Bitcoin. So if something like that were to happen and we do have a retest of the all-time highs against Bitcoin, that would really start to have some more strength into that USD pair, and that would really support the argument for the bulls. Another thing that I think is pretty important though is that if we're taking a measured move from this low on August 10th to that current high, again around 29,000 Satoshis, Ergo Bitcoin really rallied about 230% in just 1 month. So that is a pretty aggressive rally. And at this point, I would really want to see a little bit of a cool down if we can form some sort of support and consolidation and gear up for another leg. I think that would be a little bit more sustainable as opposed to just continuing out the current rate of change we're sort of in. And you can see, again, it's very aggressive of a slope, and you could actually see how in just a few weeks at this current pace we would have a move back up to those highs. So just in terms of a longer term sustainability standpoint, I think we would like to see some consolidation and at the very least a pullback and some sort of higher low. So those are the things I think you should watch out for on the Ergo Bitcoin chart. Also, by the way, guys, make sure to check out our sponsors in the link in the description below. We're partnered with FTX.us. It's a great exchange where you can buy, sell, and trade cryptocurrencies. And if you sign up with my link in the description below or through my referral code SNOWYCRYPTO, you can get a 5% discount on exchange fees. So I hope you guys did enjoy the content and the analysis, and I'll see you in the next one.